SCHD ETF has been known as the dividend growth king when it comes to dividend ETFs. Now this is because the ETF's dividend growth rate, or basically how much the ETF pays in dividends year over year, has been incredible, relatively speaking at least. And what I mean is that the ETF has been paying investors more and more in dividends year after year as time's gone on. But one of the biggest questions still that I get quite often is, how much do I need to invest into something like SCHD in order to be set when it comes time for retirement? Now in this video, we're going to dig into SCHD, and I'm going to go over some of the awesome things in particular that this ETF has to offer. Then later on, we're going to get down to the numbers, and I'm going to show you exactly how only $25,000 invested into SCHD could allow you to retire quite comfortably. I have some huge news to share with you guys. My brand new dividend investing ebook and custom dividend tracker that I've been working on for weeks now is finally done. So go ahead and grab a copy down below. It's the first link in my description. Thank you in advance, and let's get right into the video. But before all that, let's go through some of the basics. Ticker symbol SCHD is the Schwab US Dividend Equity ETF, and it's a super popular dividend growth ETF that's been trading for around 12 years now. Now this ETF's objective is pretty simple. It says it's to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. And if you are more interested in learning a little bit deeper of what this ETF has to offer, and of course how this ETF truly works, check out some of the other videos on my channel, because throughout several videos I've actually dug a little bit deeper into the Dow Jones US Dividend 100 Index, which will give you a lot of clarity when it comes to how this ETF truly works. But some basic highlights are a straightforward low-cost fund offering potential tax efficiency. This fund can serve as the core or complement in a diversified portfolio, but simply speaking, this ETF offers pretty much everything that most dividend growth investors are looking for. Now what I mean by this is that this ETF offers growth, at least it has historically, as far as ETF price. The ETF is up around 190%, not even including dividends. Also, this ETF of course offers dividends, a 3.5% trailing 12-month dividend yield, which is not all that bad considering how much growth potential is in the ETF price. But on top of that, this ETF offers some massive dividend growth. We're talking on the 10-year CAGR, 11.3%, on the 5-year, 13.05%, and on the 3-year, 9.4%. So pretty much no matter how you look at it, throughout history, SCHD has been paying more and more in dividends over time, which is going to be vital when picking something like this to use for retirement. Unless, of course, you're an investor that has millions upon millions of dollars to invest into, which not many of us have. So an ETF like this that has grown historically in ETF price also offers a decent starting dividend yield and pays more and more every single year, generally speaking. It's exactly how, in theory at least, an investor could invest something very small, relatively speaking, into an ETF like this, and then when it comes time for retirement, years down the road, the power of compounding could potentially do its thing, and an investor could have more than enough when retirement comes around and when it matters most. Now before we go through the exact math and I show you how $25,000, just $25K invested into SCHD could in fact be enough to leave an investor with enough money when it comes down to retirement. Before we go through that, I want to explain some very important inputs when it comes to building out a long-term portfolio, especially if you are a dividend growth investor that's looking to use your portfolio to retire. You see, as dividend growth investors, we all have different goals and different things we're trying to solve for, but this right here is one of my long-term dividend growth portfolios that's made up of several different dividend-paying stocks and ETFs, but realistically speaking, this portfolio has a few jobs. I want this portfolio to be stable throughout whatever the economy throws at us in the future. And I want all the stocks and ETFs in this portfolio to continue to pay dividends over time. And on top of that, I want, at least for the most part, many different positions in this portfolio to pay me more and more in dividends as time goes on. Because like I sort of touched on earlier, if you are an investor like myself that doesn't have unlimited money or massive amounts of money, massive amounts of funds to invest into a dividend paying stock or ETF, a few of the most important metrics that you're going to have to pay attention to are things like time and things like dividend growth rate. Which brings us right here to the Dividend Calculator to show you exactly how just $25,000 invested into SCHD could allow you to have enough when it comes time to retire. So throughout the Dividend Calculator, these are all of our inputs. We have $25,000 of starting principal. And keep in mind, you could start with less, you could start with more. This is just for one singular example. On top of that, we have $2,400 of annual contribution, or around $200 per month also added into SCHD. Now again, you of course could turn this to zero. You could of course turn it to $5,000 a year, whatever it might be, but I think $2,400 is pretty realistic for pretty much any investor to be adding on a yearly basis. Now on top of that, we have a quarterly frequency as far as the dividends go. We have dividend reinvestment turned on, which means all the dividends paid along the years are going to be reinvested into more shares of SCHD. Also important, we have the initial starting dividend yield for SCHD, which is around 3.6%. We have a 9% annual amount increase. This could of course go down or go up in the future, but let's just go with 9% because over multiple different time frames, that's sort of where we're seeing SCHD's dividend grow. Then lastly, we have 3% appreciation. We have 30 years invested. Let's see what we get. So year number one, this investor with a $25,000 portfolio just of SCHD would in theory be earning around $912 per year in dividends. Now with the annual contribution of $2,400 and of course the dividends being reinvested, by year number two, this investor would already have almost $29,000 invested and over $1,100 per year in dividends. Now skipping through a little bit, by year number five, this investor would have $42,000 invested already and $1,956 per year in dividends. Now, as you can see here, it definitely takes some time for the power of compounding to really kick in. And this is of course because we're starting with a relatively small amount of money, and also we're not adding all that much year after year. But in due time, you're going to see the power of compounding really kick in. Like for example, by year number 10, this portfolio is already almost to $75,000 of value and almost $4,600 per year in dividends. Now I get it, 10 years in, this portfolio is nowhere near what an investor would need to retire off of. So again, this is sort of an example for, say, a younger investor, maybe for 20 or 30 years old, and do have some time on your side. But again, I repeat, if you were to contribute a little bit faster than that $2,400 per year, this portfolio would grow only that much quicker. By year number 15, though, this portfolio is at $128,000 and $10,500 a year in dividends. By year number 20, this portfolio was already at $230,000 of principal and $25,000 per year in dividends. Now by year number 25, we get into some of the bigger numbers, and this is definitely starting to be sort of the range on where retirees would like to be. We're talking $450,000 of principal and $66,000 plus per year in dividends. Year number 26, $523,000, $82,000 per year in dividends, 27, $611,000, and over $100,000 per year in dividends. And this was all just off of the initial $25,000 investment into SCHD, and of course that extra $2,400 per year. So all the way at the bottom, last but not least, 30 years in, from a $25,000 investment, dividends reinvested, and $2,400 added per year. This portfolio would now be worth over $1 million and earning over $200,000 per year in dividends. Now remember, these are just off of the numbers that we use. Things could be different, of course. You could add less money, you could add more money, you could start off with more or less, and on top of that, things could change. Like for example, let's say the SCHD ETF's dividend gets cut, or let's say for some crazy reason it doubles. But regardless, this really just goes to show and proves that you don't need millions upon millions of dollars, or even hundreds of thousands of dollars, to invest into a high quality, wealth generating vehicle like that of SCHD, in order to be quite comfortable when it comes time to retire. But now I want to hear from you guys down below if or if not you currently have a stock or ETF that you buy consistently that you're trying to sort of do something like this with. You have a buy and hold forever position that you're growing over time and looking to use it for retirement. If you do have that position, comment the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.